President Trump with a blunt, unmistakable message to America.
11 months ago, I inherited a mess, and I'm fixing it. When I took office, inflation was the worst in 48 years, and some would say in the history of our country, which caused prices to be higher than ever before, making life unaffordable for millions and millions of Americans. 1 year ago, our country was dead. We were absolutely dead. Our country was ready to fail, totally failed. Now, we're the hottest country anywhere in the world.
Welcome to the Big Money Show. I'm Dagen McDowell, along with my co-hosts Taylor Riggs, Brian Brimberg, Jackie DeAngelis, and with us for this hour, Making Money host Charles Payne. Good to see you.
Good to see you. Love that. Love that top.
We can get into that later. I got a deal on this. And it's old. It's old. It's about 30 years old. The president's address comes as we get brand new inflation numbers. November's consumer price index shows that CPI up 2.7% year over year. That was cooler than expected. Come on, people, 2.7% inflation. Who doesn't love that? It was 3% when he took office, a sign inflation pressures easing, even if Americans don't yet feel that fully at the checkout line. And the president used the moment to look ahead. He teased what he calls warrior dividends, aggressive housing reforms, and what could be the largest tax reform season ever, fueled by tariff revenue. The pitch: growth first, relief next. Prices may be stabilizing, but for working class Americans, confidence has not yet caught up. The data is improving, the message is sharpening, but the economy is still very much on trial. Mr. Payne, what say you?
Yeah, everything you said and all the way above is true. And, you know, I think when you started, the most important part of this, and President Trump mentioned it, is the levels that we're dealing with, we had not seen in at least a generation. You have to go back to the early 80s. When a lot of people alive never even knew about that inflation could be this tough, that it could go up that quickly. And even though President Biden was warned that it would, they still went ahead and they flooded the zone. And it's tough to dig out of something like that. But we are digging out of it. This morning's numbers were so amazing. Not a single firm on Wall Street was even close. Not even close.
Kevin Hassett, member, said 61 economists were surveyed by Bloomberg. Every single one got it wrong. I thought of you.
Yeah, not even close. Not only did they get it wrong, not even close. So now, of course, all day long you'll hear, the grumblings. Well, if you look at shelter and if you do this and if you do that, hey, the number's a number, right? And plus, the gist of the number is housing is coming down. Some of these key things are coming down. They're moving in the right direction. You know what's ironic? President Trump said he would lower inflation on day one. And so you see CPI, the 3.0 number in January, it came down every single month until the tariffs went in. You knew there would be a small hit. That small hit is there. Yesterday, a great piece by Anna Wong over at Bloomberg saying in so many key categories, she already sees potentially where tariffs have already peaked. That's going to be a non-story for next year. Yeah, absolutely. And that's what I love.
Because it's a one-time tax.
Right.
And then as you adjust year over year,
right,
it's not factored in. E.J. Antoni, earnings growth is outpacing this year, inflation this year. The average American's weekly paycheck now buys 1.6% more than in January after falling 4% under Joe Biden. What a difference a president makes.
Can I just say,
11 months.
These numbers are like Shakira's hips. They don't lie.
Oh.
Okay? And the
I'm not allowed to think about that. I can't think about that.
I stole that from somebody, but I liked it. I was waiting for a day I could use it. The numbers support the president's message last night. What I loved about what he had to say was that he was direct. He was to the point. He hit all the notes. He wasn't gaslighting Americans. He was saying, we've done X, Y, and Z. We're going to do these next few things next year. This is a work in progress. And he was honest with the American people. Yesterday, I also thought that he was going to unveil some sort of a surprise. I forecasted that. I said, I'm going to go out and on a limb. And what did we get? We got the warrior dividends. So 1.45 million U.S. servicemen are going to get that check for $1,776 before the holidays. Also, to add to the numbers, the president was citing what people are going to feel next year as a result of the big, beautiful bill. He talked about feeling as a family $11,000 richer. that is substantial, especially when you consider Joe Biden's 9.1% inflation that took money out of the American family's pocket. So I think that he was very clear that it's going to take time for all of this to kick in. But he also did a great job of looking at everything he accomplished, which includes more than just some certain things on the economy, the border, foreign policy, peace. He proved that trade and tariffs were scary for the American people, but that they are bringing dividends home to us on the manufacturing front, foreign investment front, our just independence in general on the world stage, not being reliant on China, but also that this tariff revenue can be put to really good uses. So he hit the energy notes as well. The national average for a gallon of regular gasoline today, $2.89. The forecast is that by in just a few months' time, we could be substantially closer to $2.50 or even under that. So he's doing a lot. And I think that anybody who watched that said, we hear you. Thanks for being honest.
Do you want me to jump in?
Jump in.
A
On
few
Shakira.
thoughts. That was a good one, Jackie. You know how we used to do nominations for SAT word of the day? Maybe we do like analogy or metaphor of the day.
Or made up word, because sometimes we
I
have
like
those.
it.
Oh, I want to be in that
Don't
category.
lie.
I make up a word every day, so I'm in that one. I get the Don King Award at the end of the year for most made up words.
Kevin Hassett does not make up words. He doesn't mince words either. I love what he said, that if you take a look at the last 3 months and annualize it, core inflation is now only 1.6%. We anticipated this. If you put the pedal to the metal on aggregate supply, that puts downward pressure on prices. That is what we are seeing. It is the near-term trajectory that he likes, that annualized rate in the last 3 months. Here's another note that I read. Core PCE next year will be below 2% if shelter is only at a 1% annualized rate next year. So there is a lot of excitement. I think, Charles, to your point, I read a lot of naysayer reports like, oh, but like you can't track the month over month in shelter. So let's take it as an anomaly. I'm with you. The number's the number. Today, let's talk about the numbers that we have. Next month, we'll talk about the numbers that we get next month. I don't want to pick and choose and strip out everything to fit the narrative. Here was another interesting note that I read, Brian, as I've continued to say, this is from Anthony Pompliano. Deflation is smacking the U.S. economy in the face. Tariffs are deflationary. AI and robotics are deflationary. Deportations are deflationary. But too many people have their brains broken by politics to understand what is happening right now. I also really love
Not us. We talk about how it's driving prices lower.
His newsletter is going out to, Jackie, you mentioned this. Real numbers to tie with feelings. And I love that the president mentioned real numbers. And then, Brian, I punt to you. Under Biden, he said real wages were down $3,000. Under Trump, the average American, a typical factory worker, wages will go up $1,300. For construction workers, it's $1,800. For miners, it's $3,300. So that is real wages after inflation that will make us say that take home pay, my pocketbook will be fat. Cash flow in versus cash flow out, Brian.
I would call this a jolly panel. We're looking for a jolly panel. You guys are bringing it. I can't think about Shakira, Jackie, though I appreciate that metaphor. I'm not allowed to do that. But I was thinking about this speech in terms of kind of a metaphor closer to home for me. It felt like a halftime speech, okay? If you're thinking about midterms, a 2-year time for midterms, we've got 1 year done. We're at halftime. We got 1 year to go. So the president gave a halftime speech. I thought it was a good halftime speech. I think what he's saying is we like the ball we're playing. We think we can play that kind of ball in the second half, and it's going to be good. But nobody ever goes to a football game and says, I love the halftime speech. They go and they say, what happened on the scoreboard, right? So 2026 has to be a scoreboard year. I love the optimism around inflation. I share a lot of it, but it's got to happen. And the wage growth, they've made up some ground with Biden, got to make up a lot more. Because if you look at some of the polling around how people feel, and I don't blame them for this, they feel like maybe they haven't gotten the best of the president on the economy yet. Like that's his issue, and he's been spread thin, and he's had to be. But I think this is a year where he has to the economy's got to put up some really good numbers on prices and paychecks. And at the end of the day, nobody will remember the speech last night, though it was good. They'll point to the scoreboard, and that will be the speech that people will think about when they walk into the polling booth in November.
See, I think that one of the reasons that people feel the way they do about the economy is because of housing. It is because people who want to buy a house, it's just out of reach, and they know it. And lower rates or lower mortgage rates specifically are not going to make houses cheaper. It will increase buying and potentially send prices even higher. That's one of my concerns. Before we jump, anybody want to talk about the actual speech last night? I wanted to get in there and produce it because it felt the president's personality was too big for the shot. It was too narrow and too close. It needed a wider shot because he was given a speech that he gives at a rally, and it was too tight.
Did he feel boxed in?
Yeah, and those charts, couldn't read them.
Right.
Produce them for TV. Do not put up PowerPoint slides that some economists put together.
I hear you. I hear
I'm
you
not
on
wrong.
that.
And I was watching it, and I'm like, what? And we love charts and slides
Chart of the
and
day.
bar graphs and bring it on.
I'll give him some credit that he stayed on script. He didn't ad-lib. He got a little bit faster and sort of louder as we got toward the end. I noticed his cadence sped up. I'm wondering if there was some sort of time limit since they were taking, sort of national broadcast time to be able to do that address. But he did do it in 20 minutes, and that seemed to be the hard cutoff there. But when he sticks to script, that's good for him.
Loved the Christmas trees, Dagan.
I did too.
She wanted more Christmas tree.
I wanted
More
better
Christmas tree.
graphics, better charts and graphs, and matching the president's personality with the actual framing of the shot. That's all. Back it up a little bit. Back it up. Give him some room.
Zoom out.
Give him some room. Maybe put some people in the room with him. Just saying.